scared money don't make no money. A scared man don't make no money. Scared money don't make no money. A scared man don't make no money. Scared money don't make no money. A scared man don't make no money. Scared money don't make no money. A scared man don't make no money. Scared money don't make no money. Don't be scared, make a move. A scared man don't make no money. You ain't got shit to lose. Scared money don't make.
Welcome back to the Brave Money Podcast. That was a little clip from Crypto Face's song "Scared Money Don't Make No Money." Yeah, Crypto Face is a crypto trader, so he's got a YouTube channel, pretty big. He trades big positions, much bigger than mine. So definitely check him out. But that song was pretty cool, and I thought it was a nice intro for this episode titled "Scared Money Don't Make Money." So I'm Leon Gabon. Welcome to episode 3 of season 2. These are very short podcasts, so hopefully I can imbue you guys with some knowledge in the investing and trading space. So scared money don't make money, but also brave money will lose money. So real traders need to get inoculated to the fear of losing money. And I feel the fear of losing money kind of prevents a lot of people from investing themselves, right? Most people out there, if they're even in investing, they have some company do it for them, or some advisor, or it might just be their IRA or 401k. They're not even doing any, taxable account investing. Much less trading. And there's fear, right? Most of us have busy lives, doing this work and taking care of kids and whatnot. So, and they may think that they're not good at it, but like any skill, you can get good at it with practice. So yeah, real traders need to get inoculated. Really, investors need to get inoculated to the fear of losing money. And I watched this episode recently on Grand Thumb's YouTube. He's this ex-operator. He's got this YouTube about guns. And he had this episode, I forget what it was called, but he interviewed a fellow spec op operator about inoculating for battle. I think it was an episode on gunfights. So if you're in a gunfight with someone else with a gun, and I think they talked about, have more friends with guns than the other guy. But an important thing there was getting inoculated to that in the first place. So that spec op guy was saying, his first gunfight battle, which was it was either Iraq or Afghanistan, but it had that adrenaline dump, and you had that zero in vision, right? And I've experienced that, but in jiu-jitsu, not in wasn't in the military, but I guess better over time. So bringing this back to trading, you're gonna have losses, you're gonna lose money, but that's fine, because that's part of the learning experience. And you can paper trade, you can paper invest, I guess, but you're not gonna learn, because you're missing more than half of what you need, which is that emotional impact, that emotional feeling, right? And getting inoculated to that. And the traders that make it, we make more money than we lose. So all that, and I'm now coming to talk about my recent Coinbase trade, which I've closed out of now. I opened it in April, the day it IPO'd, and then a week later got into the options. So this is the worst loss of my trading career, biggest loss. And I'm going to go into my trade thesis, what I missed, why I missed it, hindsight, current, and then my current trade plans, what I'm doing now. So really, what I learned from it, as well as this kind of trade. What's good is I've experienced losses in the past, definitely not as big as this, but it's not something that's going to stop me from investing and trading. Like nothing ever will. Like this is for life. Um, it's a new passion that's just what I want to do. So basically, lost over $100,000, and there were a few mistakes I made. So let's get into what I missed. And it nothing to do with competitors, right? There are people saying, "Oh, Coinbase has all these competitors, and they have lower fees than Coinbase." Coinbase far outweighs all competitors combined. It's not even close. Like not even close. Voyager, that's like the poor man's Coinbase. They don't have institutional customers. Like no, barely anyone even knows about that app. So and Coinbase owns 11% of the entire crypto market cap in assets. Robinhood, they're coming out with crypto staking, which I could see that taking some percentage away from Coinbase, but not in the short term. Like that's going to be further out. Um, oh wait, let me step back. Let me talk about my trade thesis. Why did I get into Coinbase in the first place? So it's Coinbase and the crypto bull cycle that we're in right now. So we're in basically the fourth major crypto bull cycle, and that's going to drag up crypto companies. And that's thesis number one, right? That's why, okay, yeah, Coinbase, easiest trade that you could see, right? And they, like I said, they own 11% of the crypto market cap, and staking on their platform increases the percentage owned of their assets. So they're going to be a very rich company. Over time, I see them being $1 trillion company. Like they're basically going to be like the Bank of America of crypto in America. They work really well with regulators, and there's so much more we can do in crypto that we will be doing in crypto that we haven't even thought about yet. Because this is still like the early days of the internet, right? Like no one saw Facebook and Twitter and YouTube coming. So there's going to be more stuff with DeFi, NFTs, social tokens, stuff like that. That's coming. Basically, they have this open sky of what they can do. And ARK Invest, Kathy Wood, who believes in innovation. I mean, she the first several months she bought hundreds of millions of dollars in Coinbase call shares. So she also has a similar vision of where Coinbase is going to go. So back to what I missed. So it's nothing to do with competitors. It was the Bitcoin chart. So I missed bearish divergence on four major indicators. So bearish divergence means prices going up, but the indicators, the oscillators, are going down. And this was major bearish divergence on a multi-month time frame, like 3 to 4 to 5 months on these various indicators. And these indicators are the RSI, or the relative strength index, and the MACD, or moving average convergence divergence. Those are the two basic indicators. Like if you know anything about technical analysis, those are the first two you use. So you can Google what those mean, and you can go to tradingview.com and put those on and look at the daily time frame. They work on all time frames, but for major divergence, I like looking at the daily and weekly. Now, for Bitcoin specifically, there are two other indicators. The Mayer multiple, which just takes the 200-day moving average divided by price to give you what the fair value of Bitcoin is. It only works on a daily chart. And when it turns orange, it signals a top. So I missed that. It actually signaled the top 3 times. The first 2 times, the Bitcoin price was lower. It was like 58, 50K, 60K, and then finally 64, 65K, the top. So the third time it indicated the top on the Mayer multiple. And then the NVT, or net value transfer. So the amount of coins that have been held for a long time starting to move. That's also a signal to kind of pick a top. But all 4 of these had bearish divergence for months. So, that's not necessarily a sell sign. You kind of have to wait for um, indicators. It, another indicator, right? Or something to invalidate the current bullish trend. Confirmation. That's the word I was trying to say. So you have to wait for confirmation of a breakdown before taking action, right? You can't just do that on bearish divergence. So Elon's tweet is the next point that triggered the top. That was around April 14th, I believe he tweeted, one day before the Coinbase IPO, April 15th. Now, again, his tweet alone, that's not enough for a sell signal. But this day he tweeted about Bitcoin ESG and Bitcoin being bad for the environment or energy intensive, what I believe was his words, and Tesla had to get out of, not accept Bitcoin for payment. It was definitely political. Like Elon definitely would not have done that if it wasn't for some pressure. But the day he tweeted that, the next day, or that even that day, I believe, everyone else who were they were waiting to put out this FUD because the price of Bitcoin was kind of overstretched. I mean, 12 months plus of like continuous upward pressure. So all the FUD that came out was coordinated. So you had the China FUD, you had the Tether FUD come up again, and regulation FUD. Like everything came out at the exact same time. So you could tell that these guys were getting ready to release this because of the technicals were getting overstretched. But Elon's tweet just forced their hand. Like they had to do it that weekend. Like, whoa, like Elon tweeted this. We got to release it all right now. They even got the Pope to slight diss Bitcoin. um, so coordinated FUD, bearish divergence, those were sell signals, and crypto companies follow Bitcoin like an altcoin. So that should have given me pause before entering my trade. So again, what I missed, well, I didn't actually miss this. I did see this. So Bitcoin, because of that FUD and bearish divergence breakdown, it tested important support at 48K on April 25th. But that was a test of a support. Unless it broke down past that support, that's not a sell signal. Now, yes, I could have sold at 50, 60, but when you're technically trading, and I wasn't technically trading crypto at the time. I was entering in a new options play on Coinbase. And I'll get to more details to that soon. So Bitcoin tested that support at 48K. Then it got supported, like it bounced back. But the FUD continued and the technical breakdown continued, and people started paying more attention to the long-term chart. It tested it again May 12th. That is an exit sign. The second it broke down, Coinbase price was around 281 at the time. I should have exited. That's what I should have exited. And also another mistake I did was buying shares first day of the IPO. Not a smart move. Inside investors will always sell day one. Same thing happened with Robinhood. Same thing happened with Roblox. But then Robinhood and Roblox both bounced back quite nicely. And I should not have bought shares in the first place because I was not planning on selling covered calls. I was planning on buying the call options. So due to that, I bought day one 381. So 300 to 400 shares. And as soon as the options came out a week later, I sold those shares at a loss to get into the options. So that's a mistake. Big mistake there. Didn't stay out of shares if you're going to trade the options. And if the price is breaking down, instead of buying the options day one, I should have waited a week. And then if price is lower, wait another week. Price is lower, wait another week. Now, getting to why I missed these signs, why I did not adjust, because all these signs are clear, right? I mean, in hindsight and at the time, these signs were clear. basically one word: FOMO. Crypto FOMO. Thesis on coin was strong, but too early. It will be a much larger company, but it was just too early to take in this trade because of Bitcoin. Why I missed them? I disregarded the bearish signs on Bitcoin, and like I said, crypto companies follow Bitcoin like altcoins. And because the traders and investors in coin are mostly crypto whales, plus Kathy Wood, and Kathy was she's not really trading it; she's more investing long term for fun in ARK F. She was buying shares, but everyone else is a crypto trader, so big whale traders, right? So if Bitcoin, breaks down, they're gonna sell their stock positions related to crypto, their altcoins, in the market as well. And another reason I missed this was there was a trade in 2020 I did with Peloton where I was down 80% in the call options, but I held on to Peloton to make a 3x return. Now I used that by mistake. I should never do this again, to compare it to when I was down 80% in Coinbase, and then I doubled down on my Coinbase position. So now, in hindsight, proper adjustment, what I could have done, should have done, right? Now, never think about this, constantly. Just learn from it and then move on, but learn. Don't dwell on it. So May 12th, I should have exited because of the Bitcoin breakdown. I should have exited all crypto positions, all stock positions related to crypto. 20% down in my position, I should have exited rather than using hopium and past experience with Peloton for a rebound. 20% down. And now that's my risk tolerance. You can set yours at 10%. Your 3 to 5% options, they move a lot, right, compared to the stock. So I think 10% is much too conservative. Like you could get stopped out of that pretty easily. So 20% down on a position should have been my exit point. And what could I have done with those fund, that 100K instead? I could have traded the wheel on Tesla, conservative income earning play, collecting premium. More conservative play could have been just buying the shares, but I don't buy shares. Well, I'll use shares to sell covered calls, but that was not going to be my play. So most likely 100 times out of 100 times, if I go back and pass, or the multiple Leons in the multiverse out there would not have bought the shares. So that's what someone else could have done. Another thing is I could have kept my cash in crypto and buy the crypto dip. But yeah, more likely the better the things I would have done would have been the May 12th exit and 20% down exit. So now what I'm currently doing, I'm back majority into crypto. Took cash out of majority of my stock and option positions. I bought the dips in crypto July 19th and the 20th, and I'm up between 65 and 75% gains on that in 3 weeks. In 3 weeks, I've made more than what I lost in Coinbase. Now, obviously, if I had that extra 100K, I could put that into crypto and be up a lot more dollar-wise. But I'm still good. Oh, and this is another thing. I kind of sized this Coinbase position a little too heavy for my so lesson learned there. I sized it too heavy for the kind of risky trade I was taking, a 4-month options trade, September $400 strike. So it should have been more like 3 to 5% rather than been so as big as it was. The only stock position I'm actually in at the moment, I'm buying up shares of Hood slowly. And I'm going to implement a much more conservative sell side strategy on Robinhood, like I did with Roblox. I just made profits on that. So just buying the shares and selling covered calls, selling cash secured puts. But I'm easing into this position on Robinhood. So that's what I'm doing at the moment. And the last thing I'm planning on doing towards the end of this month or next month is I'm planning to play Ethereum options on ledgerx.com. So I bought call options on Bitcoin and Ethereum in 2020 and 2019, I believe too. Bitcoin 10K December 2020. So definitely made a lot of money on that. I closed it a little too early, but I wanted the cash to actually buy the coins. Now, that call option gave me the right to buy Bitcoin at 10,000 in December 2020. But I instead of waiting, I just wanted the coins so I could earn interest on them in BlockFi. So I'm planning to buy Ethereum options. I'm looking at the December $1,500 strike, December this year, $1,500. So that's deep in the money. But I'm also looking at the March $10,000 Ethereum calls, which are cheap, and I think Ethereum will definitely be over that before March of 2021. But yeah, so I just took you through a journey through the largest loss I've ever had, and the lessons I've learned to make me a better trader and investor. Again, scared money don't make money. Brave money will lose money. But in the end, if you put in your 10,000 hours and learn, this is a skill you can improve and you will do better. So with that, may the stonk and crypto gods bless us.